Alright, welcome back. The day is November 12th, 2020, and the time is 4:05 a.m. Enjoy the music. Welcome back to another edition of Melon Economic News. Alright, here we go with stock futures. Alright, we're going to get it started real fast. Alright, the S&P futures are down negative 15.50. The Dow futures are down negative 138. That was the Dow futures down negative 138. The NASDAQ futures are down negative 42 even. And the Russell's 2000 futures are down negative 11 points. Alright. Alright, we're looking at the FTSE 100. It is down, fluctuating right now at negative 49.53. And the Nikkei 225 is up 171.28. Alright, we're going to get into some cryptos here. Bitcoin to the US dollar is down negative, it's down $96.60. The CMC Crypto 200 is up $6.23. Alright, US Bitcoin to US dollar is 15,814.41, and CMC Crypto 200 is at 306.01. Alright, get a look at the bond. The 10-year bond is sitting at 0.9580. The VIX is down, in the negative 0.52 to 24.28. Alright. Now we switch over here to, that was yahoofinance.com. We're going to go back to kiko.com. Look at some of the futures markets for the European markets. Alright. The stock 50 is down negative 21.49. The FTSE 100 is down 46.16, and the DAX is down 102.47. Alright, we went over the Nikkei is up, and over here the Hang Seng is down negative 91.64. The S&P ASX 200 is down negative 31.50. Alright, that was by kiko.com. Alright, we're going back over here to yahoofinance.com, and we some more currencies. The US dollar, the euro to the US dollar is at 1.1786. Alright, the GBP to the US dollar is at 1.3158, and the US dollar to Japanese yen is 105.35. Alright, that was by, we went back over to yahoofinance.com. Alright, now we're back over to kiko.com. Look at the world spot price of gold, of precious metals. Right now, gold is down negative 10 cents to $1,866.10. Silver is down 18 cents to $24.19 an ounce. Palladium is up $1 to $869 even. That was platinum is $869 even, up $1. Palladium is up $20 to $2,363 an ounce, and rhodium is $14,000 even. All right. So we get into some news here. Alright, this is from ZeroHedge.com. Deutsche Bank proposes a 5% work from home privilege tax. Alright, so they're starting to tax you from, the banks want more money, and the system is coming, so they're looking for more ways to get more revenue. So the banks want to charge you a 5% tax for working from home. Alright, at the time when the Fed is already monetizing the entire US budget, thanks to helicopter money, sparking conversation about the utility of taxation. When Biden administration is set to at least try to roll back most of Trump's tax cuts, the last thing the population wanted to hear about is even more taxes. Yet, in a modest proposal from Deutsche Bank, the bank argues that it is time for a pervasive COVID shutdowns. All right, those who can work from home or the abbreviation WFH, receive direct and indirect financial benefits. They should be taxed in order to smooth the transition process from those who have been suddenly displaced. So you work from home now, they want to tax you, alright? In other words, the argument goes that working from home is somehow punitive, and since work from home, or WFH, during the pandemic leads to many benefits such as resulting disconnecting themselves from face-to-face society, a 5% tax for each work from home day would leave the average person no worse off than if they would worked in the office. The bank calculates that such a tax could raise 49 billion a year in the U.S., 20 billion euro in Germany, and 7 billion euro in the UK. That fund subsidizes for the lowest paid workers who usually can't work from home. All right, so here they go, taxing people from home now. All right, if Deutsche Bank is doing that's a German bank, that means that the rest of the banks have come in. They're not talking about it, but if one bank does, that means multiple banks have gotten together and they've already started trying to talk about that. All right, that was from ZeroHedge.com. All right, go look at that article. Deutsche Bank proposes 5% work from home privilege tax. All right, ZeroHedge.com. All right, then we had back Yahoo Finance, Yahoo News. This is from Reuters. They posted this on YahooNews.com. UKnews.yahoo.com. U.S. still faces possible default wave. Asset declines due to pandemic Fed. All right. The United States may face a wave of defaults and significant declines in asset prices because of the coronavirus pandemic and recession. The Federal Reserve warned on Monday. All right, this is from November 9th. All right. In a stark reminder, the economy is far from out of the woods. As many households continue to struggle, loan defaults may rise, leading to material losses for lenders. The Fed has said in its latest biannual financial stability report that business debt has risen sharply, and businesses increased borrowing to weather the period of weak earnings. The general decline in revenues associated with such reductions in the economy activity has weakened the ability of business to service these obligations. All right. So basically here, the comments, here we go again, a little bit down here. The comments were issued on a day when the U.S. market surged on news that a coronavirus vaccine may soon be on the horizon, a possible boom to business, households globally. All right. Within this one, they're not saying that within this article that some of the companies who announced they had a coronavirus vaccine, some of their CEOs and bigwigs sold off a lot of their own stock in their companies. All right. So something's going on. So this is kind of fishy news. All right. But the U.S. economy is not out of trouble. We're still in financial debt. We're now operating a 115% debt to GDP. All right. So with them looking to tax you more and them looking to say that we're not out of the woods yet, we're in financial trouble, be on the lookout. All right. This article: U.S. still faces possible default wave. Asserts declines due to pandemic. From the Fed. This is from UK News. UK.news.yahoo.com. All right. Article from Reuters. All right, and our final topic for today, we're looking at this is from the OrlandoSentinel.com. All right, www.orlandosentinel.com. All right, and this is a cataclysm to what's this is not cataclysm, wrong word. This is what's going on with this company here. This is what's going on all over the U.S. All right, Duke Energy to resume disconnecting customers behind on payments. All right, as these moratoriums continue, this is what's going on. All right, out of the Orlando Sentinel, this is coming from August. They were talking about continuing payments, cutting payments to customers despite these moratoriums coming out. We got California, PG&E is beginning to cut customers out. Maryland utility companies will probably start resuming next week, cutting power to companies. All right, Duke Energy next week will resume disconnecting customers for non-payment as advocacy groups are intensifying demands for statewide moratorium on disconnections and debt forgiveness for low-income customers during the pandemic. At Central Florida, largest power provider, Duke was part of a widespread move among utilities in March that suspend cutting off electricity to customers unable to pay their bills as COVID-19 strangled the region's economy and employment. All right, many utilities including those owned by owned municipalities in Orlando. Winter Park, Kissimmee returned to disconnecting earlier this summer, while Duke and Florida Power and Light Company continued to suspend disconnects. All right. Duke has 380,000 customers in Orlando, 158,000 in Seminole, 86,000 in Lake, 82,000 in Volusia, 50,000 in Osakilla, and sorry for that, I probably butchered that, and a few hundred in Brevard, Brevard. All right. So go check out this article. This is what's going on. Even though this article was from August, utility companies, some of them ignored the moratoriums throughout the whole summer, and they continued to go ahead and start cutting out power, water, gas, anything that pretty much what they can think of as a utility. They were kind of trying to cut it off. All right. So go get that looked up, and continue to take care of yourself. All right. Please take care of yourself. All right. Once again, I want to thank you for joining us. Another edition of Melanin Economic News. Remember, become your own banker, become your own savings and loans, become your own credit union, and most of all, pay yourself first. What that statement is, because we've gotten questions about this, what do we mean about it? That means take care of yourself financially. Take care of your money, take care of your household goods, take care of yourself, all right? You can't take care of your community until you learn to take care of yourself first, all right? Once again, thank you for joining us. See you around. Let's get it started.